Hello guys, welcome back to my channel. For those who are new here, consider subscribing and like this video, share with like-minded traders, and also comment down below your thoughts. So this video is for those people who have been texting me and emailing me and saying, I have a very small account. Most of them say $100, $500. All right, can I make money with only this small account? Yes, it's possible to make money if you are consistent in the Forex market. I'm going to give you some ways you can actually grow that small account without spending much time on your computer every day. Okay, you can actually invest your small money or $100, $500, even $1,000, even $50, or even $30. You can invest this money by trading mostly indices. Okay, Nasdaq. You can put your money into German 30, or you can put your money in US 30. All right, and leave that money over there. You can place your trades with a very small lot size, 0.01 lot size. If you have an account of $30 or $50 or $100 over $500, you want to use a very small lot size, which is the smallest 0.01 lot size, and place at least 5 trades for the beginning. Let your leverage be set at 1 to 2,000, up to 1 to 2,000. Okay, don't use unlimited leverage. And then when you open those positions, all right, you let the positions run. Do not place a stop loss or take profit. All right, leave it open, because I'm sure with the indices is not like crazy movements up and down. All right, you'll still find the trades running. You may have a drawdown some days, but generally indices like Nasdaq, or you have US 30, you have German 30, you have the S&P 500. All right, so you can open multiple positions. As the value of the indices appreciates, you keep adding positions. You keep adding positions with the same lot size. Okay, with the same lot size, you keep adding multiple positions. You keep adding and leave it to run for days, for weeks, for months. This is how you can grow a small account. All right, guys, so we are going to start with gold. As you can see, this is on a monthly chart. But before I go on with showing you how you can stack the trades and hold long term, remember this is a long term strategy, okay, to grow small accounts. All right, I don't know, for some of you have large accounts, that's fine, but I'm focusing mainly, this can also work on large accounts, but I'm talking about those who have been asking me how they can grow small accounts. So this is the strategy. Okay, it's pretty simple. We are going to start with gold. As you can see on a monthly time frame, gold has been rallying for the longest time, guys. It has been rallying to the upside for the longest time. Just imagine, gold was at $251 an ounce years ago. Many on a monthly time frame, you can see that it's rallying to the upside. Gold will never drop back to zero, guys. That is impossible. Gold is a safe haven for most people who are saving their money. All right, it's a safe haven. When there is a crisis in the economies and all of that, people buy gold to keep their money from losing value with inflation and all of that kind of stuff. All right, during war, you can see that during the Russia-Ukraine war, you saw that gold rallied and broke all-time highs. All right, it's because people are trying to safeguard their money. They are fearful, so that sentiment keeps them, makes them buy things like gold, because gold has always been a safe haven for people who are investing. Whenever there is a rallying up to the upside like this, if you have an uptrend, as you can see gold rallying to the uptrend or to the upside, you can see that there is always a break of structure to the upside. For those who haven't watched my previous video, go watch it. I explain how you can actually place your trades while the market is rallying to either to the upside or downside. So in this case, gold is rallying to the upside. So we are going to hold gold long term. So we are going to be buying gold at a retracement, at levels of retracement. What I mean by retracement is when the price pulls back, like at this point, and at that point, okay, those are retracements. That's where you focus on buying, because you are buying at a discount or a lower price, and you are sure 100% that gold is going to rally to the upside as an asset. So you want to stack so many trades, all right, when there is a retracement. As you can see, let's go to a 1 hour time frame. All right, now you can see that this is gold on a 1 hour time frame. All right, last week gold really dropped low from this point. Last week gold dropped all the way down to the price of 2,882 there about. All right, and so what we are anticipating now, this retracement is good for people who want to buy gold long term, because we all know that gold is an asset that will always rise in value. It will always rise in value, and the target is 3,000 up here. Okay, it's 3,000. So we are looking at gold climbing back to 3,000. So what does a smart trader do? You have your $100, you start stacking right now. Okay, when the week opens, when the market opens next week, you are going to start stacking trades in this area, within this area. You are going to place your trades, buy trades at 0.01 lot size, 0.02 lot size, all right? And you are going to keep stacking those trades, all right? So that when gold resumes that uptrend, okay? When gold resumes that uptrend, let's say gold begins to resume that uptrend, okay, all of those trades will be in profit. And at every retracement, and whenever you see a retracement, okay, to the downside, you stack more positions. That is the strategy. You stack more positions when there is a retracement. Remember my previous video, I taught you how to place trades in the retracement. You don't stack trades, or you don't place a buy when in an impulse. You place a buy in the retracement, okay, to get a better price. That is a discounted price. Okay, so in case you are stacking going downwards in a downtrend, you want to place your sell order when there is that retracement back to the upside. Okay, that retracement gives you a better premium price to sell at. All right, so whenever we are, like for indices, they are always appreciating in value. All right, so you are stacking your trades. Whenever there is a retracement, you stack more trades. In the impulse, you let it run. You wait for that retracement, you stack more trades. Okay, and you let it run. You let it run for months, for weeks, for months, even years. And you can make more money doing that with a small account. And you don't have to look at your screen every day. You can stack more trades every other 3-4 days, or five days, or even once or twice a week. You add at least 2 or 3 positions. All right, and as the asset value increases, you also increase your lot size. In the retracement, you increase your lot size. If you started with a lot size of 0.01, you increase it to 0.002, because now your free margin has increased. All right, so you stack more trades at the retracement, all right, as the asset value appreciates. Buying there and you are buying there. Okay, at every retracement you'll be buying. Okay, at every retracement you'll be just adding positions. Add as many positions as possible. Okay, at every retracement. What I mean every retracement is these levels. When it retraces, you buy. When it retraces, you buy. When it retraces, you buy. And you keep holding all of those trades. So you can imagine if you buy gold from around this point, and gold rallies back to these levels and goes beyond to 3,000. Just imagine how much money you will make from this point to that point of 3,000. Okay, so that account can actually grow times more. You can grow it 10 times more. So it's possible, right, guys? So, and also you can increase your lot size when for example you double that $100 to $200, and you are right about let's say the price has grown up to this level, okay, 2,900 thereabout. You can actually open more trades, all right, with a higher lot size, let's say 0.03, 0.02, and continue holding those trades all the way to the ups up to 3,000. That's the target. This is Nasdaq. As you can see, for the longest, guys, it has been rallying to the upside. All right, with some retracements, yes, like this was a year really of retracement, okay, around October, up to October 2022. Then from there, it started again rallying all the way to the upside. So imagine who opened so many positions at this level, okay? Think about, with all this move up to the upside, think about how much they made in this one move, okay, since 2022 or 2023 to this point. Okay, think about how much they made from 2022 to 2025 right about now. That's a lot of money, guys. All right, so that is the power. So right now, what we are waiting for with NAS 100, sometimes it's called US Tech. Basically what you are doing is investing in is the top 100 companies in the US forming this index, all right, which is called NAS 100 or US Tech. All right, so those top 100 companies cannot really fail. They will always appreciate in value, sometimes with some drawdowns, but yes, generally they will always move their value to the upside. So we are looking at this NAS 100 value appreciating in the next coming months, years, like that. So when we got the lower time frame of 1 hour, just to be clear, in a 1 hour time frame with Nasdaq, we can see that it's the price is about to break out of this zone, guys. It's about to break out of this zone. So right now, what we should be, what I suggest you do. So right now, you can actually decide to open multiple positions here. Okay, you can decide to stack trades here. Okay, it could retrace. Yes, there is a possibility that this price will retrace and begin testing these levels here. That's no problem. You use the small lot size, so you shouldn't mind so much about the retracement. So the price could retrace to this level, but since you use the small lot size, the drawdown will not take out your account. And please don't set stop loss or take profit. Just hold it. Okay, so when even if the price draws down to this point, if you have a drawdown, it will still climb up, because NAS 100 will always rise in value over time. All right, so right now what we are looking at is stacking the trades right about now, about this point. So we are going to be stacking. As you can see, the price of this asset has been consolidating for quite a while now. All right, it has been consolidating in between here. So we are anticipating a kind of breakout at this point before we can actually continue rallying all the way to the upside. So you can buy Nasdaq also and stack positions. Okay, with your $100, stack 0.01 lot size and open at least 5 positions to start with and wait. Okay, as the price breaks this level up here to retest this point. So at this retracement again, you place more trades right there. Okay, you place more trades right there in anticipation for the price to push back and continue rallying all the way to the upside, guys. All right, so that is Nasdaq. So guys, this is German 30. As you can see, for the longest time since its inception in the 1970s, I believe, it's just rallying to the upside. It's just climbing up. The value is climbing up. So German 30 is basically an index tracking the performance of the top 30 German companies. Talk about Mercedes-Benz, talk about BMW, all those companies which are not dying soon. So their value will always rise with some, of course, some retracement, some drawdowns, or some downtime for those companies, but generally their value will appreciate over time. So that's what we are looking at. We are looking at long-term investment. So we are looking at buying German 30 also, stacking trades, and it is a good time to invest now. Let's go to a one hour time frame. So this is German 30 in a 1 hour time frame. As you can see that there has been some consolidation in between, the break above, then some movement like that, and we are anticipating a possible break above this point. This is what we are looking at, a possible break above, then retest within this area, and the price continues to rally for years upwards. So right now what we are looking at is stacking as many trades as possible around this region. All right, it doesn't matter even if the price retraces down below here, you can still continue to stack. Retracement is good for long-term buyers because that retracement gives you a discount to continue buying all the way to the upside. So we will buy within this region. We'll continue buying within this region. Even when the price retraces within this region, we just continue stacking trades. All right. All right. So at every retracement, okay, as the price rallies to the upside, with every retracement, we buy. Another retracement, we buy. Another retracement, we buy as the price rallies all the way to the upside, guys. You continue stacking as many trades as possible and use proper risk management according to your account balance. If your account balance is $100, you want to use a lot size of 0.01 to begin with. But as your account grows over time, because you will keep getting more profit every day, you keep checking. All right. As it appreciates, when you get to $200, you can open more positions at retracements for let's say the price has broken above here and it has retraced, so you place more trades here. Okay, because if you bought around this point, let's say you bought around this point, at this point, then you will be in profit. Okay, so you will stack more trades here with a little bit higher lot size, 0.02, as the price rallies all the way to the upside. So guys, that is the strategy. So take note of this, guys, and apply it in your own trading journey. For those who have small accounts, this is one way you can actually stack and make more money.